Hi, everyone. Welcome back to XDC APAC Podcast. As you know, I'm the host, Soni Mahanty, and I'm back today after a long time, I would say. And exactly, I think after a year, we are having Token 2049 again in Singapore. And this time, we have a special guest all the way from Dubai who's a core team member at XDC, MENA, Benny. Hi, Benny. Welcome to Singapore. How are you today? How's been your time in Singapore so far?
Thanks for having me on this podcast. I think that's a wonderful effort that you're doing here in Singapore. Yeah, I came all around Dubai to here, Singapore, attending Token 2049. And yeah, about myself, I'm Benny, working at XCC on the growth side and DeFi side. So I helping XCC to growing on the ecosystem in DeFi and on-chain numbers. I'm based in Dubai and working at the XCC headquarters. So that's a wonderful place. So I recommend everybody coming to Dubai. Please reach me out and we can have a coffee or we can invite you to our side events and
Yeah.
the XCC office as well.
Exactly. As Benny mentioned, I've been to the head office. It's amazing. Its own office at Emirates Financial Tower,
Yes.
right? If you are going to be at Token 2049 or otherwise any other events, I think Dubai hosts more events than Singapore. So yeah, feel free to drop by. And yeah, XTC team is going to be happy to host you. It's a very interesting phase in XTC's journeys with recent news of lot of news with the USDC integration, with the ETP listing going on stock exchanges, getting a circle onboarded, and the DeFi space that you're specifically working on. First of all, how many years you've completed at XTC, and how have you seen your growth as well as XTC's growth since you've joined?
I used to be an engineer and I have like 2019, I joined the space in crypto. I started working on different landscapes. I came to know about XCC about 3 years ago and I joined XCC 2.5 years ago in Dubai's office. So for me, it was a wonderful journey because I migrated from the dev career to the business career. XCC really helped me to upscale my knowledge and everything around crypto stuff. I'm really focusing on a lot of stuff that's happening on the XCC. I'm happy to dive in as we are moving forward, like the staking side, stablecoins, RWAs, how the on-chain workflow for this capital deployment are going to happen. So this is a thing that I'm working on with the team members that they are based in Dubai and other friends that we are working with.
Because I know I'm also like working with the markets team on the TVL program. That's a very broad topic. We'll just break it down into a few subtopics for our audience to make it very simpler. Starting with RWA, the real world asset landscape. When they hear XTC, the first thing that comes to their mind is, oh, it's a RWA chain, right? So what's the landscape, RWA landscape been so far on XTC?
From day one of XDC Network, we've been focusing on RWAs before even the RWA buzzword exists in the market. So if you look at XDC closely, we've been focusing on mainly on trade finance.
Yeah.
So basically, it's combination of digitization and tokenization of the trade finance activities. Simple words, I can say we can tokenize a container of goods that comes and ships from one country to another country, including the digitization of documents, trade documents, and bill of ladings, and a lot of very special words that Sonil, I think you covered that with Sonil as well. Basically, we digitize those documents and we finance those type of activities. So that can be come through the private credit markets, private credit marketplaces like TradeFi Network and the other partners that we have. So in general, RWA market is so big. It's categorized into the different subcategories, like stablecoin is one of them, based on RWA.xyz. Private credit is the largest one right now. And the other categories like commodities, like CGO, Comtech Gold that we have, this is something that people can looking at it as a blue chip asset on XCC. That is one-to-one backed by real gold in the treasury, fully regulated, and basically you can freely use it anywhere. Although there is KYC for minting and redemption at the regulatory segments. So these are the main focus areas that we have. Although we did some activities and quite active collaboration with Securitize like 2-3 years ago about tokenization of treasury bills. That's a really important thing. I think we are completely aligned with what's happening in the US about Genius Act and different acts. I will go through it on later on the conversation. Been fully focusing on the builders perspective and the numbers growth perspective. We had a lot of acceleration programs onboarding these type of asset classes basically through different that you've been part of many of them and plug and play APAC and Silicon Valley, so it's still going on. I think from the builders perspective it was a move for us to onboarding builders and projects on that way and giving them enough support both financially or on the business, whatever support that we can afford. So I think that's a very important thing to supporting the dev communities and the builders that were contributing and building products.
Yeah, I think you have touched basically a broad range of topics, subtopics as well. You mentioned about XDC Trade Network, right, where we can tokenize cross-border trade.
Digitizing basically documents
the
and
trade
financing
documents.
created financial documents like bill of ladings and e-bills basically.
So if somebody would like to reach out to XDC Trade Network, they can do that via this website, www.xdctradenetwork.com.
You can get more information by reaching out Sonil. Sonil is leading that project. Any point of contact at XDC, feel free to reach out. We will connect you to the right person for that particular project. And although there are some other initiatives like TDI initiatives as well, running by Andre Custerman, hosting events and trying to making some impact in the industry. So it's not all about XDC, it's about making impact and pushing regulatories or this industry forward for more efficiency in terms of capital management, capital movement. If you put all this together, like RWAs, cross-border payments, digitization of assets, you can get a good combination in terms of onboarding these asset classes and operational perspective, right? So people can on and off ramp easier. All these trade partners, they like fiat, right? They don't understand what stablecoins are, right? It's a good thing that we provide payment rails for them to move the money very easy and very efficient.
You're right. So basically when people talk about XDC, it's just not a layer one chain, as you rightly said. We have different dApps built on XDC. XDC Trade Network for financing trade, then Comtech Gold, where anybody can mint their gold account. Is that correct? Or tokenized gold?
They need to be KYC and it's publicly tradable in different exchanges. I mean, if you go to Comtech Gold website, you can get to know what's happening there. And I think there are chances that you can be LPing over there, providing gold and get CGO token on the chain and doing whatever DeFi strategies or whatever efficiency that you expect from the on-chain mechanisms.
Amazing. And also you added mention about the payment rails, on-ramp and off-ramp. Obviously, I was also a part of the payments program with Plug and Play. And we managed to have strategic partners with a lot of players who have the off-ramping, on-ramping in geographies in Southeast Asia like Vietnam, Philippines. So you can actually on-ramp using XDC and off-ramp into their respective currencies, which is a great thing, right? So these are various use cases. Thank you so much for taking us through that, Benny. You must have seen there's so many forums here focused and titled on stablecoin payments and stuff like that. But that's been a buzzword for a very long time. Not only here, I've also spoken to many bankers today, and they are issuing their own stablecoins. So where do we stand in that category?
Yeah, if you look at, I want to take you through the history of these stablecoins and what happens exactly in crypto side and the DeFi side and where we are right now and what's XDC's positioning itself into this very big market. So if you look at the history and the rise of decentralized stablecoins like MakerDAO and DAI token, decentralized stablecoins, we got a very major shift in DeFi that happened that let these DeFi strategies get settled with the other asset classes like ETH, BTC and other stuff. Later on, USDT and USDC became very popular and we got DeFi summer last 2020 and 2021 with a lot of major stablecoin issuance on the DeFi side, and they basically locked it into DeFi, into the different DeFi primitives like lending, DEXs. And this is all belongs to the history right now. But recently, we've seen a lot of demand for fiat-backed stablecoins like Circle and a lot of institutions that are basically issuing their own stablecoins thanks to Genius Act that happened by US administration that allows the rails for people, for institutions, banks to issuing their own stablecoins, either for the retail exposure or the B2B perspective. That really helps for efficient capital movement. Imagine for the hedge funds, market makers, they can move assets in and out from different chains, from different custody to another places, very efficient while they are compliant, right? So that's a really important thing, in my opinion, about the stablecoin market. But right now, I was checking before this podcast, the total market cap of stablecoins right now, it's sitting around 300 billion of the total issuance of stablecoins in general, both regulated and semi-regulated stablecoins. And if you look at the total size of the crypto market, it's like $3 trillion, right? There is a huge gap on this front, in my opinion, that stablecoins have a lot to do and that they have a lot to grow. So basically the utilization of most of these assets can be happen on chain on the different lending protocols, can be isolated markets, or can happen can have some secondary market like DEXs or regulated DEXs. That really helps for efficiency of capital movement and fixed income products, right? So on the previous topic about RWAs, we have a lot of private credit tokenized assets. You can go and check it out on RWXYZ. That you can see these private credits mostly they are issuing through the partners that we have in Brazil. They are issuing RWAs. One of the problems or challenges I would say for RWAs is they need to hold it on the custody and they are not allowed to move it out of the custody. Imagine the treasury and bonds, right?
Yeah.
So once gets regulated, of course it's a very good news that wow, these guys are putting these financial instruments on chain. However, these assets are not movable. I mean, outside of the custody. They are not liquid into the secondary markets. You cannot put collateral and borrow against it. So that's a really biggest challenge in the RWA side that is solvable somehow. So we can give exposure to the DeFi perspective. We can make those assets liquid by different mechanisms like vault and curators or public allocators that we have already in DeFi, and powered by some partnerships that we have for Oracle side, for proof of reserve and NAV, net asset value features and services they have.
With respect to that, I would like to continue this question about RWA and DeFi. So how can we create structured products combining the power of RWA and the power of DeFi?
Yeah, if you look at traditional finance and what's happening there for structured products, it's a combination of asset classes that they can put together. They manage their risk with the help of banks or institutions. They get funded, and there are some fixed income products. There are some higher risk appetite investors. They want to get into the rails. For example, one of the most secure one is the US treasuries. People investing in US treasuries, I think right now is 3 to 4 or 5%. That is somehow recognized as a guaranteed APY or asset class that people can earn money, right? If they deposit their fiat. So same rails happening on chain as well. There is possibility that you can create a basket of assets that you can manage the risk. For example, the basket can be combination of the private credit with maybe senior tranches, junior tranches, plus treasury bonds, right? So you can get like, if treasuries are giving like 3 to 5%, maybe private credit is giving 10 or 15% or 20%, depending on the risk that is assessed, I mean, in terms of the volatility and risk-reward ratio, right? So you can get an average APY with a diversification. One of the, I think, important lessons for all the investors around the globe is diversification of assets and how you manage the risk. I think same concepts can be applied into DeFi because we are dealing with money and liquid assets. So this is how I would say the fusion of DeFi and RWAs, that RWAs can raise capital on chain through stable coins like the partners that we have like USDC. And I would like to mention that like what I was saying about the numbers of the total market cap of the stable coins and the total market cap of the crypto, the doors always open to get more utilization on the stable coins and creating more fixed income products or more risk volatile assets on XDC Network, and that they can be offered to variety of the investors from low risk or high risk assets.
That area of yield bearing stable coins I think still is a very gray area.
Yes.
With no clarity on regulations. The whole idea is that what's the difference between yield bearing stable coins, like which is pegged to a fiat versus the fiat itself, right? It all depends on the returns, right? The
Yes.
APR returns.
So what's happening exactly for the regulated stablecoins is you deposit money fiat to the mechanisms that they have, and they issue, I don't want to name it, but it's like the fiat backed stablecoin, one-to-one pegged. So what happens under the hood, either held in the custody or either held in the bank, the real cash, or it can they buy US treasuries with it, right? Basically, and the assets that is issued is non-yield bearing. So you are not expecting the value of that asset going up. It's always one-to-one with the USD or the underlying fiats. And while the issuer of that stablecoin can earn APYs for example, receiving some yield from US treasuries like 3 to 5% that I mentioned, and it can be idle in the bank, right, for the redemption and other stuff. Yeah, I agree. Yield-bearing stablecoins are a gray area. There is not much regulation around it, especially in the US. And you are not allowed to sell these type of products for US citizens or other jurisdictions that is kind of restricted. But it's happening in DeFi right now. A lot of vault infrastructures offering this type of products, basically the same thing that we explored earlier, creating a basket of RWAs, which is diversified through different from low to high risk assets. And once you deposit, you get a share of that position that you're holding. So that can be, if you are depositing a stable coin, you can get a yield bearing a stable coin. That represents your share on the vault. And the price of that you are expecting to going up because you are investing to the fixed income type of products, or it generates some yield over time. The curve price is going up, right? So it's still a gray area, but I would say I would compare it to the index funds that is happening in TradFi and the vault infrastructures that is happening in DeFi side. So I would say vault infrastructures are the Web3 format of the index funds. Basically, you deposit to the index funds or S&P and the other index funds, you will get a share. Or if you invest into a stock market, you get a share. And based on the revenue or the belief of the investors or the community of the capital market, it can go on up and down, right? So that's the same concept. The share token, it's a yield-bearing asset, basically, right? So when it pegs to the stable coins, it's a yield-bearing stable coin. And it has some restrictions right now, but I believe there are a lot of innovations happening throughout DeFi. I'm kind of bullish that it's going to have some frameworks around it that handles the regulation, compliance, and the custodian part. Because as long as you touch the user's money, you're under securities. You're breaking the rules.
Don't break the rules. So coming to the altcoins, altcoins are also all-time high with Bitcoin and the private coins. I mean, we don't have a crystal ball to predict future, but still XDC also have a native coin. A lot of things are happening around that as well. So what are your predictions, or what do you think the future looks like of altcoins in general? Yeah,
first of all, none of this stuff that is happening on this podcast, not the financial advice. And I'm just saying about my assumptions and what I saw in the market. If you look at the last bull run that happened 2020 and 2021, And if you look at the first ETF of Bitcoin and the capital movement towards these type of financial products, we saw that basically a lot of institutions are more familiar with the compliance wrappers like ETPs or ETFs. That XCC, by the way, thanks to 21 shares, we have a ETP exposure for XDC Network that allows create the rails for institutions to compliantly interact with the blockchain products or the blockchain financial products, right? So that's a very important movement. And regarding your question about the alt season, and basically it's really relevant to what's happening at Federal Reserve or Fed and the interest rates, and basically based on the historical stuff that has happened throughout the history. Whenever the cuts are low, DeFi is booming. So in terms of the capital and the yield products or financial related stuff, and eventually it impacts to the ecosystem of that particular product. Can be ETH, can be Solana, can be XDC, variety of layer 1 and layer 2s in general. That's the beauty of blockchain, basically, and the game theory that is happening through the blockchain, basically from the investor's perspective, builder's perspective, and also the ecosystem's perspective. So I think that's a really important, conclusion, I would say.
So again, whatever we're discussing it here, it's not a financial advice. Do your own due diligence before you sort of invest into any stables or altcoins, Benny, because regulations are a very important, segment that anything that touches people's money, regulations obviously has to be around, right? The recent regulations, be it the Genius Act or the MiCA regulations that kicked in, how that is relevant to XDC ecosystem? Yeah,
regulation is very important to nowadays is very relevant to whatever activities that is happening on the on chain, basically. So I would say from the XDC's standpoint, the architecture standpoint, I would say XDC is very compliant on that front, because if you want to operate on the network, you need to be KYC'd and then stake a certain amount of XDC token, and you will be eligible to operate on the network as a master node or standby node, right? So what this really does is it's very compliant with the it's very easy to be compliant with the factors that is happening around the regulation in different jurisdictions. So I would say from that front, XDC from day one since 2019, it was it's been compliant, right, on that front, because we have KYC nodes. In comparison, for some other networks, they don't have such type of facilities. For KYCing nodes to operate on the network. The source of and origination of the fund or the person that wants to operate on the network, any type of L1 or L2s, is very important. Yeah. Regarding your question about regulation and these acts that are popping out every week in the US, I would say, I covered the Genius Act. So non-yield bearing a stablecoin, and it should be one-to-one backed by the fiat or held in the US treasuries or on the bank. And other acts that came out, so that I remember, it was related to proof of stake networks that is directly relevant to what XDC does. So it's compliant to institutions that's running this type of financial infrastructures, because based on the blockchain's design, when you operate a node, you are expecting some rewards, right? Because you are putting your efforts, you're running nodes, putting some electricities or...
It's mining, right?
Yeah, it's mining. It's happening on Bitcoin, but XDC on that front is very efficient because it's a delegated proof of a stake network, right?
Right.
So you don't need to put a lot of computation power to fix the puzzles. It's now legal. That's why a lot of ETFs and ETPs, although they have some funds that held in their custody, they are allocating a little bit of their funds or their percentage into the validators, especially for proof of stake networks, that is targeting a higher yield, and eventually those index funds and whatever financial regulatory wrappers that we have on top of the crypto assets can generate more yield, right? Another factor is DATCOs, the digital assets treasuries companies, that, for example, we saw a strategy a MicroStrategy that they run this for the first time, and followed by ETH and Solana. So I would say there is a huge opportunity for XDC and XDC community to having such financial products that basically it's a company that people buy this share of tokens, and under the hood everything goes and buy that particular underlying crypto assets, right? So that's a very important aspect, because there is a lot of demand right now at the time of speaking for the crypto assets, that a lot of institutions, depending on the risk appetite, they are preferring to operate on the chain. A lot of private equity firms or public allocators, that they can perform better than traditional finance, right? That's why always we have like a comparison between TradFi and the on-chain capital, because we are solving some very complex puzzles, right?
Yeah.
On this front.
Right.
That's really makes it more efficient and very accessible.
So I think we have been racing with the whole idea of, having this decentralized ledger, the blockchain technology, the cryptocurrencies, the tokenized assets. If you compare with the capital markets, I mean, people do ask me about adoption, like, where is the adoption? I mean, we have been trying to race with the capital markets, and it's not there yet, I would say, in terms of adoption, but eventually it will be. I think we all believe in the technology, right? Thank you so much, Benny, for your time. I know it's like you've been rushing in and out of many conferences, and today and probably in the coming next few days as well. And it was good to have you on this podcast in Singapore with the APAC, which is the APAC podcast. You've been very active on social media with your Twitter Spaces and the MENA podcast. I'm glad to have you here on the APAC podcast, and hopefully I can have other members as well. Thank you so much for your time, and let's just get ready for the big day.
Yeah. Token is going to start very soon. So yeah, there are a lot of back-to-back events and meetings that we have, all XDC members, trying to push the boundaries for XDC ecosystem and the numbers and everything related to the growth. We are hosting a lot of podcasts, and make sure you're following all XDC accounts to get the latest updates. XDC Network, XDC Foundation, and all the relevant regional accounts that we have. So we are on the ground across the globe in New York or in Europe, MENA, in the MENA region and APAC region. And thanks for having me on the podcast. It's a very beautiful place to be in, very fancy theme on this podcast room. Hope to see you again in Dubai.
Sure, absolutely.
And we can run a podcast again over there.
Yes,
I'll
absolutely.
invite you. We can do it with Rebecca.
Yes, let's do that. Thank you so much. And for the viewers and the audience, you can find more information about XDC Network. Follow the links. You can find Benny on LinkedIn. I've shared the LinkedIn handle as well, and his Twitter handle as well. Please stay in touch with the community, get updates from the community as well, which will help you make informed decisions. Thank you and take care. Bye-bye.